Greetings, members, one and all of the Salivation Nation. The gold and silver pullback before the crash? Yes, that could be coming. Let's explore. And we saw a dramatic increase in gold and silver prices, especially silver prices, yesterday. But now, as predicted, there is somewhat of a pullback, although not a huge pullback. Gold is now down 1%, and silver is down just over a quarter of a percentage point, but still above $25, and gold is still above $1,900 now, because of the multiple different factors, but mainly geopolitical concerns over what's going on in Ukraine and Russia right now. And because of that situation, we are seeing platinum start to pop out here. $18 increase today, and palladium an $84 increase. Palladium is nearing its all-time high of about $2,900. Still a little ways off, over $100 shy of that, but nonetheless, according to some analysts here, there's some routine profit taking at midweek, and so that's why some of the metals are down, as we refer to this article here from Jim Wyckoff. Gold and silver prices are lower at midday U.S. trading Wednesday, and on routine downside corrections and profit taking from the shorter-term future traders after recent gains, understandably so. The Russia-Ukraine geopolitical situation will continue to keep the precious metal prices elevated. April gold futures were last down $23.80 at $1,920.30. And then it talks about silver down too. Those numbers we just looked at are rallying. The U.S. stock indexes today also weighed on the safe haven metals. This week, the week-old Russia invasion of Ukraine continues, and no off-ramp for the conflict is in sight. However, we'll talk about that momentarily. Some military experts are saying the Russia-Ukraine war could last 10 years. It is likely to keep traders and investors edgy for some time to come, or used to it, one way or the other, which means that more likely things will dissolve into a sense of normalcy, kind of like what happened with the coronavirus pandemic. The marketplace heard Federal Reserve Chairman Jerome Powell testimony today to a U.S. House panel. Powell said he favors a quarter-point rate hike at the FOMC March meeting. Otherwise, his remarks were not significantly market-sensitive. Many market watchers still think the geopolitical crisis could alter the timing and degree of the Fed's expected interest rate increases later this year. The key outside markets today see NYMEX crude oil prices posting strong gains and trading around $110 a barrel and hitting an half-year high at $112 today. The U.S. dollar index is higher again today and hit a 1.5-year high. And then that's another reason why gold and silver may be falling. But if we see here, gold is to remain well supported as the Fed is forced to raise interest rates, according to Gus's Poles. We'll see here the Federal Reserve remains on track, and this article, also from Kitco from Neil Christensen, says that the Federal Reserve remains on track to raise these interest rates later this month and tighten its monetary policy through 2022. However, one market strategist said the gold market should remain well supported in the current environment. So this is another take on it. He thinks that the gold will remain high. I think it very well could, but there's some other news we'll talk about here momentarily. So in a recent telephone interview with Kitco News, Thorsten Polle, chief economist at Degussa, reiterated his call that the Federal Reserve will only make cosmetic adjustments to interest rates and remain well behind the inflation curve. Yeah, that's pretty much a given. The Federal Reserve just wants to keep alive this expectation that they have everything under control. If the Fed tried to get up in front of inflation and real rates turn positive, it would crash credit markets. It would put paper money at risk. Polle's central bank outlook comes as inflation has risen to its highest in 40 years, and we know it's at 7.5% in January. He added that the current environment is forcing the Federal Reserve's hand, and it has no choice but to raise interest rates. But they will be timid. We'll see how it plays out. And on Wednesday, on Capitol Hill, Chairman Jerome Powell said that the central bank is on course to raise interest rates. It's pretty much a foregone conclusion is going to happen, which I don't think it could do a whole lot, although I think we may see gold and silver drop some because of this. Because a lot of times people think these prices are baked in because of what's been said, but we did see this normal, as we said in the routine profit taking in the previous article here, that has occurred. I think once it actually does happen, for the first time, gold will probably fall. And it may not necessarily crash, but it will take a hit, I believe. And we'll get into the crash here momentarily of what could happen. He added investors would continue to jump into gold as they look to protect their purchasing power. Gold not only protects you from currency debasement, but it also provides you with a return on your investment, according to him. I don't look at it as an investment or a return on an investment. I think you're gambling if you think you're going to have a return on investment. I guess you could do that with the GLD and the space there, but with premiums, it really should only be seen as a hedge, in my view, for long-term holdings of it. And I believe physical is best leveraged in that area. Let's see here. So while investors are focused on what the Federal Reserve will do in the next 2 weeks, Pillay said that gold had become an essential global asset. Late last month, gold prices rose to a record high against the Japanese yen. As Russia invaded Ukraine, gold rallied to a record high against the euro. The U.S. dollar is the world's most important paper safe haven currency, he said. But there is another option, and that is gold. So that's right. So it's gold and then paper money. U.S. dollar, to be specific. Do not underestimate the power of the dollar, even in this environment that we live in. All the other currencies are falling, and they're being debased. If that's even a term that would be applicable here, they're being inflated. There's nothing to debase against because they're not backed by anything other than government decree, hence the term fiat currency. But this is where it gets interesting here. We look at this article from CNBC. The gold rally cools as bond yields stock and recover, and palladium rises. Gold slipped on Wednesday due to an uptick in risk appetite in U.S. bond yields, which concerns over supply crunch that may follow sanctions on Russia kept the price of autocatalyst metal palladium near a 7-month peak. We're seeing more of a technically motivated pullback as there is a bit of a lesser need for safe havens. We've seen equity markets stabilize, said David Meager, a director of metals trading and High Ridge Futures. Wall Street gained and benchmarked U.S. 10-year Treasury yields edged higher after Federal Reserve Jerome Powell signaled interest rate hikes could start this month despite uncertainties surrounding the conflict in Ukraine. Although gold is considered a safe investment during such uncertainty, it's highly sensitive to rising U.S. interest rates, which increase the opportunity cost of holding bullion. Analysts also said gold's move may have been led by a large sell order, driving a roughly $20 drop at about 5:27 a.m. this morning. But it is not clear who or what prompted that move. So this is essentially kind of what happened, what we saw with silver on my live stream this past Sunday night. Meanwhile, Commerce Bank analyst Daniel Brisman noted that gold prices could go up despite U.S. rate hike in March. Everything is dependent on how the Russia-Ukraine conflict develops. And there's where we're going to go next, which could essentially lead to a crash here of gold and silver. If we see this timing of the markets and we see gold and silver drop because of the Russian or because of the Federal Reserve raising rates a quarter of a point, we could see it drop some. Not a whole lot, but I think it probably will at first as the market gives some confidence. Okay, here we are. We're on our way back. Finally, we're able to confidently raise interest rates at least a quarter point. That's a start. And they may feel a little bit more strength and a little more, at least some confidence in the dollar will rise at that point in time, at least momentarily is what I predict. Now, it could be totally off on that, but I think that's what's going to happen for the short term, very short term, like within a week or two. And then we get this next meeting, peace talks we've already seen one round of peace talks between Ukrainian officials. I don't know if Zelensky himself was involved, and Russian officials, or Putin was involved, but there's another meeting scheduled. And seeing that, according to some reports, and again, this is where, what news are you going to believe? Western media, Eastern media, Russian media, and finding the truth somewhere. There has been lies on both sides in all of this. And so finding out what is true as far as the frustrations of the Russian army not making as much progress, I think that is probably a fair assessment, that Putin was not able to just take over the country as maybe they had predicted or thought could occur. And maybe this is an opportunity in these peace talks for some sort of progress, or maybe even a ceasefire. If there's a ceasefire or a pullout based off of some agreement that's done there, again, one thing to note for these peace talks, that the condition of Zelensky and Ukraine is that there is no ultimatum. But an ultimatum does not mean there cannot be an agreement where perhaps Zelensky could, or his folks, concede Ukraine and parts of the eastern part of the country, and for an exchange for a pullout of troops. They come to that agreement, not as an ultimatum. And if that's the case, I think we could see gold and silver drop dramatically, because what's propping up gold and silver now? It should be inflation. But guess what, folks? It is not. Right now, it is all about the conflict in Ukraine and the uncertainty there, with oil prices at over $110 a barrel. This is what's driving uncertainty in the marketplace and gold and silver prices. We have a little bit of a reprieve today, but essentially that's why prices are up now for gold and silver. So if that does happen, and there's an agreement made, and there's a pullout of troops, especially if there's a pullout of troops, we could see gold and silver potentially crash, because it's piggybacking upon what the Fed does, and a great resurgence to the dollar. And then that means potentially ease of sanctions that would affect the West with oil and the like. Let's see how it happens. I'm just spitballing, essentially, theorizing what could happen. Be prepared for whatever could occur here, but that is why gold and silver could crash if the timing of this stuff works out in that regard. And you know, both places could come out as victors if that would be the situation that could arise, where Ukraine cedes Crimea totally in the eastern part of Ukraine. We'll see how that plays out. It'll be very interesting to find out what results from that, but I'm telling folks, if it does occur, be prepared for a major smackdown on gold and silver prices. Nonetheless, there's a lot of different scenarios that can play out. I don't know if my assessment here is realistic or not. You know, with this day and age, with what's been going on, anything could happen. And I'm open to anything. You got to be prepared one way or the other. What does it mean to be prepared? If you make a purchase of gold and silver in this environment, when, yes, we're seeing as a slight dip right now, seems like a good opportunity to buy. But if that does occur, and then we see a major smackdown based off what I've just described, you got to be prepared for that loss. And the opposite holds true as well. That you know, maybe buy now, because what if the Fed cut does not work as to be expected, and then it backfires sooner rather than later? Prices could skyrocket from here on out. We'll see. So there you have it, some scenarios to consider. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.